Welcome to the deep dive. We're here to cut through all the noise and give you the insights you really need. Today, we are tackling a big one, Florida's home insurance market. It's been, well, a real challenge, hasn't it?
Definitely. Especially for you all on the front lines, the real estate professionals.
Exactly. So if you're maybe one of our KW Coastal Living colleagues who missed that crucial Protect Your Deals Insurance 401 session with D's Insurance, this is for you. We know navigating this is just critical.
Yeah, our mission here is simple. Distill the most important stuff, the actionable updates, the insights you need.
To help you protect your deals, basically, and empower your clients when they're facing this insurance maze.
That's right. This is tailored for you, the agents. We're going deeper than just the headlines.
Okay, so expect a clear overview, what's really happening, some big misconceptions we need to clear up, maybe some surprising facts, and definitely strategies for buyers and sellers.
Let's do it.
All right, let's kick off with maybe the biggest misconception out there, the one that can really send clients down the wrong path from day one.
The shop your rate idea.
Yeah, this belief that you need to shop around for the best insurance rate and that somehow different agents can magically pull different prices out of a hat for the same coverage.
It's such a common myth, isn't it? People really think Agent A can get a better deal than Agent B for the exact same thing.
But that's not how it works.
Fundamentally, no. The carriers, the insurance companies themselves, they set the rates based on filed algorithms and risk factors.
Yeah.
An agent can't change that filed rate.
So all things being equal, same house, same coverage, same person.
The price for that policy from that specific carrier is the price. No agent has a secret back door to a lower rate.
Okay, so if the rate is the rate, what's the value proposition of an agency like D's Insurance then? Why work with them or any specific agency if they can't get a better rate?
Great question. And that gets to their core philosophy. They position themselves not as, like, quote, takers, but as advisors and educators.
Okay.
Their focus is building relationships, finding long-term solutions. They know their business grows when clients are actually happy and well-informed, years down the line,
Yeah.
leading to referrals, not just closing one deal.
That completely changes the game. So if you're not shopping for the lowest number on the page, what should you or your clients be looking for? What defines real value in an insurance partner?
There are really 5 key things, far more important than just chasing the rate. First, and this is huge in Florida, access to markets.
Meaning access to different insurance companies?
Exactly. Not all agencies represent the same carriers. A broker, like D's, can shop dozens of carriers, non-captive, regional ones, state-specific ones that someone moving from, say, New York would never have heard of.
Right.
This is critical, especially for unique properties or for those out-of-state buyers. If your agent only has access to 2 or 3 companies, your client might literally have no options.
That makes perfect sense, especially with how specific Florida's market can be. Okay, what's number 2?
Number 2, client satisfaction. Think about it. When you refer someone, that reflects on you.
Oh, absolutely.
So take a minute. Check the agency's reviews online. D's, for instance, they have over 800 top reviews. That tells you something about their service level, bad experiences. They come back to you.
Good point. It's about protecting your own reputation, too. What's third?
Third, look for robust processes. This isn't just about getting the policy for closing.
Yeah.
You need an agency with strong systems on the front end, to make closing smooth, but also on the back end for service after the sale. That keeps clients happy, prevents headaches for you, and again, fosters those future referrals.
It's the whole life cycle. Got it. Fourth pillar.
Fourth,
Mhm.
they need to be true advisors and educators. The goal isn't just getting a policy to satisfy the lender.
Right.
It's about making sure the client actually understands what they're buying,
Yeah.
why they're paying what they're paying. Sometimes, maybe spending an extra $100 a year gets them vastly better coverage or something uniquely suited to them. It's about the value, not just the price.
Understanding the why behind the premium. Okay, and the last one.
Number 5 is simple. Ease of working with. Just, are they easy to deal with?
Yeah.
Choose partners who make your life easier, who communicate well, who are responsive. That directly benefits you and, of course, makes things less stressful for your client during a pretty intense time.
That's a fantastic framework. Access, satisfaction processes, education, and ease really shifts the focus from rate to relationship and reliability. Okay, so with that value lens, let's zoom out. What's the big picture? What is happening in the Florida insurance market right now? We've all lived through the chaos.
Yeah, chaos is a fair word for the last few years. It was definitely what we call a hard market.
Yeah.
Insurance was hard to get, super expensive. Closings were nightmares with last-minute cancellations, rates jumping 100 to even 200%.
I remember.
But here's the genuinely good news.
Mm.
We are not in a crisis anymore. We're firmly in what I'd call a transitional mode, moving towards stability.
Okay, transitional mode. That
Yeah.
sounds cautiously optimistic. What's driving that shift? What signs are you seeing?
Several things. First, those legislative reforms from 2023 and 2024, they are actually starting to work. They're bearing fruit.
Really?
Yeah. And the fact that we didn't see major new insurance legislation this year, that's actually a good sign. It signals things are stabilizing, the reforms are taking hold.
Interesting. So less legislative tinkering means the previous changes are working.
Seems that way. Now, are premiums suddenly cheap? No. We're not going back to 2018 rates overnight. But the rate of increase has slowed dramatically.
That's huge.
We're even seeing some carriers file for 0% increases, or even small decreases. That was unthinkable just a year or two ago.
Wow. Decreases. Okay. What else points towards stability?
Another big positive.
Mm-hmm.
New insurance carriers are actually entering the Florida market again, or expanding their footprint.
More competition.
Exactly. More supply, more competition. That naturally puts downward pressure on rates over time. And here's something fascinating. Florida, having gone through this absolute ringer,
Yeah.
is now being looked at as a kind of case study by other states that are just entering their own hard market cycles. CEOs of national carriers are literally calling Florida-based carriers asking, how did you guys stay profitable through that mess?
So Florida's actually modeling the recovery path now.
In a way, yes. It suggests we're on a path to real sustainable stability here.
That's a much more positive narrative than we usually hear. Okay, speaking of things people might not realize, let's hit some key data points, some hidden realities that you need to share with your clients.
Absolutely crucial. Number one, that $6,000 average rate you hear everywhere in the media.
Oh yeah, that number scares everyone.
It does. But it's an average, a mean. And like any mean, it gets massively skewed by outliers, those multi-million-dollar coastal properties with astronomical premiums.
Right, the waterfront mansions pull the average way up.
Precisely. The median rate, what the typical person, the middle-of-the-road homeowner is actually paying, is significantly lower. Our agency writes tons of policies every day. Most are nowhere near $6,000. You need to explain that median versus mean difference to buyers freaked out by headlines. It offers real reassurance.
That's a great point to make. Okay, what else? People always blame hurricanes, right? It's that the whole story.
Not even close. This might be the most surprising thing. It wasn't primarily the hurricanes driving the crisis. It was excessive litigation and fraud.
Really?
Get this statistic. Florida had about 8% of all national home insurance claims. Just 8%.
Okay, seems reasonable.
But Florida accounted for 76% of all national home insurance lawsuits.
76% of all the lawsuits in the country.
You heard right. 8% of the claims, 76% of the litigation. That's what broke the market. Assignment of benefits abuse, fraudulent roof claims, aggressive contractor solicitation. That was the core problem.
Wow. So those legislative reforms we talked about, they targeted that specifically.
Exactly. Things like eliminating one-way attorney fees, curbing AOBs, tightening rules around claims. And it's working. We've seen litigation drop significantly already, like a 25% reduction projected by early 2025. It proves the reforms are hitting the right targets.
Okay, that's massive. So it was litigation, not just storms, good to know. But then there's citizens, the state-backed insurer. Always seems to be part of the problem description.
Right. Citizens Property Insurance. It was created after Hurricane Andrew, meant to be the insurer of last resort, for people who genuinely couldn't get coverage anywhere else.
Last resort. Okay.
The problem is it became the #1 insurer in Florida. It peaked at like 1.4 million policies, now around 1.2 million. That's way too big for a last resort insurer.
Why is that a problem?
Because Citizens has its rates capped by law. They can only go up so much each year. They don't have enough money, enough reserves to actually pay out all the claims if a major hurricane hit a densely populated area where they have a ton of policies.
So if there was a big storm,
They wouldn't have the funds. And guess what? Florida law allows them to levy assessments on all Florida policyholders, even people not insured with Citizens, to make up the shortfall.
wait, so even if my client has a private policy, they could get hit with a charge if Citizens runs out of money.
That's the risk. That's why Citizens is constantly trying to shrink, to depopulate. They push policies back to the private market. Sometimes they even force homeowners to take a private offer if it's within 20% of the Citizens rate.
So staying with Citizens isn't necessarily stable either.
Not really. Plus, their coverage is generally less comprehensive than private policies. And here's a big heads up. Citizens is phasing in a requirement for all its policyholders to carry flood insurance, regardless of flood zone. That starts rolling out soon and will be fully implemented by 2027.
Wow, mandatory flood for everyone in Citizens, even if they're not in a flood zone.
Yep. It's another reason to really push clients towards the private market if at all possible. Avoid Citizens from the start if you can. Better coverage, more stability, less risk of assessments, and avoiding that coming flood mandate.
Okay, that's a lot of crucial context. Let's pivot to action items. What are the absolute must-do tips for buyers to protect their deals right now?
Number 1, connect them with an insurance agent immediately. As soon as they're under contract, don't wait for inspections.
Why so early?
Because the agent can run preliminary checks, identify potential issues with the property's insurability early on, and just generally guide the process. It prevents surprises later.
Makes sense. What else?
Number 2, bind the policy early, especially during hurricane season, which is June 1st to November 30th, half the year.
Right, the binding suspension risk.
Exactly. Once a storm is named and approaching, carrier shut down. They won't issue new policies. If your buyer hasn't bound their policy yet, their closing could be delayed, potentially for weeks. I've seen it happen. Bind early, take that risk off the table.
Solid advice. What about things like impact windows? Do they really save a lot?
Okay, impact-rated openings. Here's the nuance. To get the insurance discount, generally every single opening has to be protected. Windows, doors, garage doors, skylights,
Yeah.
everything.
Not just the windows.
Nope, all openings. And honestly, shutters or even properly installed plywood can often qualify for the same mitigation credits. The cost to upgrade everything to impact glass just for the insurance discount. The payback period can be really long.
So it's more about safety and meeting code than chasing a discount.
Prioritize safety, absolutely. Meet code requirements.
Right.
The insurance discount might be a small bonus, but don't let it be the sole driver for a hugely expensive upgrade.
Good clarification. What about older homes pre-2002 codes?
Okay, number 4, the third nail retrofit. This is a genuine game changer for homes built before the 2002 code changes, specifically regarding roof-to-wall attachments.
Third nail.
Yeah, adding a third nail to the hurricane straps that connect the roof trusses to the walls. It costs maybe $1,500, give or take.
Okay.
The potential annual savings on the insurance premium, it can be $1,500 to $3,000 per year. The ROI is incredible. If you have buyers looking at older homes, you have to tell them about this.
That's huge. Okay, number 5 for buyers.
Flood insurance gold. If the property needs flood insurance, specifically through FEMA's National Flood Insurance Program, NFIP, tell your buyer to get the seller's current NFIP policy declarations page.
Why the seller's policy?
Because of FEMA's new Risk Rating 2.0 system. Existing policies are on a glide path where rates can only increase by a certain percentage each year, currently capped at 18%. If the buyer assumes the seller's active policy by providing that deck page, they inherit that lower glide path rate.
Instead of starting fresh.
Instead of starting fresh at what could be a much higher actuarial rate under the new system, it can literally save thousands a year. Massive benefit.
Okay, those are killer tips for buyers. What about sellers? How can they use insurance knowledge to make their listing stronger and avoid closing issues?
Great question. First thing I'd strongly recommend. Sellers should consider getting a proactive 4-point inspection done before listing.
Isn't that usually the buyer's job?
Traditionally, yes. But think about it. The 4-point looks at roof, HVAC, electrical, and plumbing. If there are issues, the buyer's insurance company will flag them and demand repairs before issuing a policy anyway.
So find out early.
Exactly. Find out early, make any necessary repairs before you list, and then you can provide a clean 4-point inspection report to potential buyers. It removes a major potential hurdle and makes your listing way more attractive. No last-minute scrambling for repairs.
Smart. Get ahead of the problem.
Right.
What else for sellers?
Second, if the seller has an active flood policy, especially an NFIP policy, market that fact. Put it right in the listing description. Active NFIP flood policy may be assumable.
Highlighting that glide path benefit we just talked about.
Precisely. Educated buyers and their agents will recognize the value immediately. It's a real selling point.
Good tip. Anything else critical for sellers?
Yes, number 3, and this is absolutely crucial, roof age and condition. The 4-point inspection must show that the roof has at least 5 years of remaining useful life.
5 years minimum.
Minimum. 5 years. If it shows less than that, the buyer generally cannot get any insurance coverage, not even from Citizens. It's a hard stop.
Not negotiable.
Not negotiable. If the roof doesn't have 5 years left, it effectively needs to be replaced for the buyer to get insurance and close the deal. Sellers need to know this up front. It's often the biggest sticking point found in a 4-point.
Wow, okay. 5 years. That's a hard line.
So, bringing it back to us, the agents, how do we best partner with an insurance pro like Dees for success?
Think of a good insurance partner as your agent in your back pocket, a resource for you and your clients. Now, for the referral process itself, here's the optimal way. Dees send an introductory email.
Okay.
Send an email to the insurance agent, copy your client on it. Hi, agent name, please meet my client. Client name, who is purchasing property address. Client, please meet agent name, who can assist with your insurance needs. It's a warm handoff, and crucially, you initiate it.
And why is me initiating it important? What's the do not?
The big do not is just giving your client the agent's name and number and saying, here, call this person.
Why not? Seems simpler.
Because you lose control of the timeline. You don't know if or when the client makes the call. By sending the intro email, you've started the clock, you can follow up, ensure the insurance piece is moving forward during that critical inspection period. If insurance gets delayed, your whole deal can get delayed. Keep control.
That makes a lot of sense. Manage the process. And just to circle back one last time.
No need to have your client call 5 different agents shopping for rate. Because no agent can get a better rate for the same coverage. Top producers know this. They have 1 or 2 trusted insurance partners they send everyone to. They focus on the relationship, the service, the ease, those 5 pillars we talked about, not the rate.
Find the right partner, not just the lowest quote.
That's the key.
This has been incredibly valuable, a real shortcut, I think, to advising clients confidently, navigating these complexities, and ultimately protecting your deals here in Florida.
Absolutely. When you're armed with this kind of knowledge, you move beyond just facilitating a transaction.
You become that true consultative advisor, offering insights that really matter, smoothing the path, and building trust.
Exactly. Empowering your clients with clarity.
So here's a final thought to leave you with. We've just unpacked how Florida's insurance market went from, well, a crisis zone to now being a potential model for stability for other places facing similar issues.
A pretty remarkable turnaround, considering.
It really is. So it makes you wonder, what other parts of homeownership or the real estate process that seems stable right now might be heading for significant change next? And maybe more importantly, how can we, as advisors, start thinking proactively to prepare ourselves and our clients for whatever that might be?
That's a great question to ponder. Always looking ahead.
Definitely something to think about. Go out there, use these insights, and keep being that invaluable resource for your clients.